Hey guys, you probably know that markets across the world are on a downward spiral. US S&P has come down 20% from its peak. Asian markets are also down significantly. Now most of you must be wondering if this is the right time to invest. The answer to that question is yes, but cautiously. There are few things that you should consider while investing at this point. Let's first discuss those and we'll come back to what stocks you can buy in at the end of this video. Please watch till the end. If you look at the sector breakdown, you will see that tech stocks got hurt more than the others. And that's mostly because significant portion of their earnings is in the future. And with inflation rising, these cash flows gets uncertain and are discounted at a higher rate. Thus, these stocks tend to go down more. On the other hand, REITs and energy have performed relatively better year to date. These sectors are seen as inflation hedge. These hard assets usually go up with inflation as rise in inflation increases the rents, pushing the real estate valuation higher. However, the situation is a little tricky here as rising mortgage rates have started to have negative impact on the consumer demand. Also, with increasing commodity and raw material prices, builders have started to pass on the cost to consumer, making it even harder for new-time buy homeowners to own a house. The whole world is facing one of the biggest commodity cycle in the recent years, leading to higher commodity prices, particularly energy prices. The situation is really hard for Fed to control as there are many macro factors affecting the inflation, including growth in pandemic in countries such as China, prolonged Russia-Ukraine war, increasing consumer demand because of strong balance sheets, and excess of Fed-induced liquidity during COVID times. Now, Fed is trying to combat this inflation by raising interest rates, which would have a negative impact on equities across the curve, as higher rates are bad for longer duration equities. The supply shocks have been really bad for these companies as well. The supply shocks have been eating up margins even for stable companies such as Apple. Consumer sentiment is weakening, leading to fall in equities across the curve. Well, this brings us to the question, what stocks to buy in and if this is the right time to invest in the markets. Well, no one can predict the markets, but one can certainly start investing in companies with stable cash flows and strong balance sheets. Some of my favorites are tech and semiconductor stocks such as Microsoft, Nvidia, and AMD. Valuation of some of these stocks have gone down significantly, but the balance sheets are still very strong. One can also diversify with the lower duration value stocks in the sectors such as REITs, energy, and hospitality. Some risky investors could also look at small cap companies with a strong balance sheet, which are trading at a very cheaper valuations, and diversify across sectors. Some stocks could be Sprout Social, Builder, Snowflake, Plug, Run. For people who want some exposure in the fixed income, can also look at longer duration fixed income ETFs. Again, these are just my views, and one of the narratives that I'm following here is that major rate hike has already been priced in the markets. You should do your own analysis before investing. Now this brings us to the end of this video. If you have any comments, please let me know your views, opinions in the comment section, and I'll see you in the next one.